Headline: How Tether-backed 21 Plans to Rival MicroStrategy. Published at 6:58 p.m. UTC, April 24, 2025. U.S. Commerce Secretary Lutnick's son, Brandon Lutnick, overtook his father's asset management company, Cantor Fitzgerald, when his father accepted President Donald Trump's cabinet appointment. This week, Brandon announced a new competitor to MicroStrategy, 21, led by Tether. Cantor is a major player in the crypto industry because it manages many of the bonds backing Tether's USDT stablecoin. Howard and Brandon Lutnick have staunchly supported Tether. Yesterday, Cantor chairman Brandon announced a Tether-controlled Bitcoin BTC acquisition company involving Tether, SoftBank, and Jack Mallers, the founder of Strike. Mallers will lead the company as CEO. The entities, blessed by the son of a Trump cabinet member, are forming 21, NASDAQ Gesellschaft. 21 is the Roman numeral symbol for 21, a reference to Bitcoin's 21 million supply limit. Subheading: 21, Tether-controlled, Jack Mallers led. The company will acquire and manage a large treasury of over 42,000 BTC. If that strategy sounds familiar, it directly intends to compete with the leveraged BTC acquisition strategy of Michael Saylor's MicroStrategy. 21 will raise $585 million from the sale of $385 million in convertible senior secured notes plus $200 million in PIPE financing. Because 21 is undergoing a special purpose acquisition company, SPAC business combination subject to Securities and Exchange Commission, SEC, and shareholder approval, the only publicly listed entity for traders to speculate on the deal is a minority stakeholder, Cantor Equity Partners, CEP. The boards of directors for 21 and CEP unanimously approved the business combination, subheading 2.7% of 42,000 Bitcoin. Although 21 plans to own something like 42,000 BTC when it starts trading as Kenwazi, CEP shareholders might only get 2.7% of that figure based on a pro forma ownership table illustrating possible post-conversion ownership of 21. Subject to a litany of conditions and disclaimers, the percentage might even be lower upon closing or as time progresses. Not only will the company be indebted and its BTC be encumbered with a dizzying array of obligations that one observer said would make Satoshi Nakamoto roll in his grave, CEP shareholders will be among the smallest members of the 21st century cap table. Only 2 entities will be able to vote in the future company, according to an illustrative pro forma ownership disclosure, Tether/Bitfinex and SoftBank. Tether/Bitfinex will enjoy overwhelming control of the company with 71% voting power. Subheading: More than doubled in 2 days. Although securities regulator Gary Gensler resigned before Trump had the opportunity to fire him and has left any legal enforcement to a highly accommodative SEC, the price action in CEP this week has certainly raised eyebrows. On Tuesday, CEP closed for trading at $10.62, near where it had been trading for weeks. On the day of the announcement, it closed at $16.50. Today, CEP hit $39.29. If CEP ends up owning 2.7% of 42,000 encumbered BTC, which is again an illustrative projection from a SEC filing that might not actually occur, it would own about $106 million worth of encumbered BTC at today's prices. For context, the market cap of CEP is $290 million, more than double that BTC value, at a CEP share price of $28. This recording is AI generated. Get more crypto news at protos.com.